After years of losing in the markets, trying to figure out trading, thinking that some new magic strategy is gonna make me profitable, I finally found one candle pattern that changed everything for me. And no, I'm not talking about some random pattern whatsoever, I'm talking about 80% win rate system that got me more than hundreds of thousands of dollars in payouts. So in the next minutes I'm gonna show you exactly what that candle is, how to use it and why it is so good. In trading, when something is repeatable and it is actually proven to work, you can make shit ton of money. So let's get straight into it. So this strategy is all about 3 phases in the market that always repeat itself. First one, it's gonna be sweep. Second one, it's gonna be shift, and the third one, it's gonna be setup. So essentially for the first step, what we need to do is determine buzz and overall trend. Over here you can see that market is making higher highs, higher lows correction, higher highs, higher lows, and we are anticipating that market is gonna create new highs and continue this trend. And obviously if market was really moving so easy like this, everybody would make money. So where is actually the mistake that 99% of traders are doing? So step number 1 is always going to be identify the key liquidity levels, which is going to be the sweep phase after we know the structure. So we have higher highs, higher lows, higher highs, and all these lows are just liquidity resting in the market, which means orders, which means money. So money is resting here, money is resting here, and money is resting here. All these lows are money. So market is always going to either generate liquidity or hunt liquidity. So in this example over here, market generated liquidity after we pumped to the upside, which means market was moving in consolidation. We didn't know the buzz, we didn't know where the trend is, but we knew that sell side liquidity was resting underneath these lows and buy side liquidity was resting above these highs, and that is exactly what happened in the market. Sweep underneath these lows because we are bullish. So after the sweep phase we have step number 2, which is gonna be wait for liquidity grab and inversion of the fair value gap, which is gonna be the shift phase. And as you can see, if you really pay attention, not only that we have higher highs and higher lows and higher highs, which means we are in always bullish trend, but we also have bullish fair value gaps holding the price, which means if we are truly bullish fair value gap is gonna hold the price. If we are bearish fair value gap is gonna hold the price. So this is giving us even more confidence that our trade is gonna play out in our favor. So once we know that after the sweep we are gonna look for setups, it's gonna be time for shift phase, which is gonna be on the lower time frame. And you can almost always recognize when is the sweep, because usually after the sweeps you're gonna have huge wicks like here and over here. Market didn't break the structure with momentum like over here. You can see this is clear break of structure and continuation of the trend, but this over here was just sweep of liquidity. You can see by this wick over here. So this is going to be a lower time frame example. You can always enter on the 1 minute, 2 minutes, 5 minutes, 50 minutes. You can even enter on the 1 hour time frame. You can choose something that you like the most. And as you can see, this is going to be our liquidity sweep, some sort of key level, and then we are gonna have bearish fair value gap. And like I told you, if we are really bullish, bearish fair value gap is gonna be disrespected, and if we are really bearish, that means that the bullish fair value gap should be disrespected. It is very easy to understand this concept. So after the sweep, if market really wanted to continue this trend, market would do something like this. So this would be higher high, this would be lower low, this would be lower high, and this would be lower low, because this fair value gap should hold the price, but it didn't, because liquidity was already taken out and money was collected. And here comes the final step, which is going to be how to execute the trade, aka setup phase, which means place your stop loss or take profit. Stop loss is always going to be underneath the low or above the last high, and take profit is always going to be on the opposite liquidity, because we now understand that market is always moving towards liquidity levels. So when you see pattern like this in the market, you can immediately enter the trade without any hesitation, because candle closed above this fair value gap, and it is actually confirming to you that we are bullish or bearish, in this case scenario bullish, and then you can easily target the opposite highs. So this is how it looks like after we put everything together. You can make sure to screenshot this to never forget it, but if you have some questions or you didn't understand this 100%, don't worry, because right now we're gonna go on TradingView to show some real examples. Okay, so do you see right now what is the main problems with all traders They think that once they see break above some sort of meaningful level, let's say this is our meaningful level, and after we retest this level, they are immediately entering the trade. But if market was really easy to read it like this, everybody would make money, and this is why market is always gonna reach that certain level. Then we are gonna consolidate for a little bit, and then we are gonna take out that liquidity, and all the traders that entered on this line with their stop loss underneath this line, they're gonna be stopped out, and we are gonna take a trade here after the invasion of the fair value gap, and then after that market is gonna retest, and we are gonna hunt the opposite liquidity. But if market was really easy like this, I'm repeating this one more time, if market was just retesting these levels and then continuing to move to the upside or downside, everybody would be millionaires, and that is why it simply doesn't work. And the same goes with the bearish example. So let's say market breaks this level with a good displacement, and then what's gonna happen next? We are gonna retrace because we need to make some sort of correction, and all the traders, like 90% traders, are gonna place their trades here thinking that market is gonna retest it and then move to another liquidity level. But it is just not what the market is gonna do. What market is actually gonna do, we're gonna start to consolidate, generate liquidity, and then we're gonna manipulate above all these highs, and then we're gonna target the opposite liquidity, and that is how the market actually works. So this is the exact thing that I showed you, but this example is gonna be on the actual candles, and let's say this is some sort of significant level in the market. We broke above that level and we started to consolidate, and right now what market is gonna do, we're gonna consolidate and then sweep all this sell side liquidity. We're gonna collect all the money from early bars, and then we're gonna pump to the upside, skyrocket. And if you really knew how to read liquidity, you would enter the market here and you would be on the winning side. And this is how it looks like on the lower time frame. We have a bearish fair value gap sitting over here that got perfectly inversed. And then after the inversion, you just take a trade with stop loss underneath the lows, and you are targeting the opposite liquidity, and that is how the market actually moves. So if there is somebody who is still watching this video and you truly 100% don't understand this, don't worry, because we are gonna go into some live examples. Okay, so looking at this example over here from the hard time frame, let's say 1 hour is gonna be our hard time frame. You can see that since the beginning of this move, we have this bearish fair value gap that got perfectly inverse with really good displacement. And then after the inversion, this bullish fair value gap is getting respected over and over again. And what is happening with the bearish ones? Bearish ones are getting disrespected, and we are breaking structure to the upside, which means most likely we are just gonna continue with this bullish trend, and bullish fair value gap should be respected, and we are gonna hunt buy side liquidity. So what I'm gonna do right now, I'm gonna delete all of these fair value gaps, and we're gonna go to the lower time frame, let's say 15 minutes, and we are gonna wait for market to open 9:30 to hit 9:30 am Eastern time. We are always waiting for that time to hit, because that is when the market actually opens and big banks and institutions are stepping into the market. Okay, so let's mark out the highs first, because this is going to be our buy side liquidity, and the lows, which is going to be our sell side liquidity. And now what's going to happen at 9:30 when the volume kicks in? Many traders are going to think that we are going to be bearish, as you can see how this trade was looking like at the moment. But if you just wait for a candle to close in the last few minutes, you're gonna see that we are just gonna reject the bullish fair value gap, and then market is gonna move to the upside, which means we just collected all the sell side liquidity. There is nothing else left, and on the hard time frame we are perfectly respecting these bullish fair value gaps. And now what you can do after you know that buy side liquidity is still resting above all these highs, and if you were really patient enough to wait for this candle to close, you can just go on the lower time frame, let's say 1 minute, 2 minutes, 3 minutes, or even 5 minutes, and you can look for a first inversion of the fair value gap. So let's say this is your first one. On the 1 minute we need to wait for a full closure, and here you go. If you want to pair it with the 2 minutes, you can also do the same thing, because you can see that they are perfectly aligned. And maybe if you want to go on the 3 minute time frame, you can also see that 3 minutes was perfectly inversed. So one last time, what is this telling you? If bearish value gap is not holding the price after this move to the downside, and if we are not respecting that, but actually disrespecting inversing it, that means that we are gonna be bullish, and you can easily place your trade immediately after the inversion with a stop loss underneath the last candle low, like I told you, and you can target the last highs. Also, your take profit can be opposite liquidity on the lower time frame, but you can easily target even on the hard time frame the opposite liquidity. So right now this is almost 4 risk to reward, which is amazing, and if I play the price, we can watch how this is playing out in the real time, and you can see how beautifully this plays out towards the take profit because we are perfectly aligned with the market. And let me also just show you this. Immediately after we hit our take profit, you can see that market started to consolidate in this box over here, which means a new liquidity is started to generate, and market is always repeating its cycles. So you can see that this is not a coincidence. Immediately after we hit our take profit, that was the opposite liquidity, market literally died and we are starting to generate new liquidity. So what's actually gonna happen next? We're gonna sweep these lows one more time, and then we can take a trade trying to target the opposite liquidity, and that is all you need to know. Right now we are not gonna take the trade because it is outside of our trading session hours, but that is just how the market really moves. So I really hope that you enjoyed this video. If you did, smash the subscribe to never miss another banger, and in the description you have all the links for my free community. That's gonna be it. I'm gonna see you in the next one. Peace.